Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. The Honorable, the examiners of this proposal thesis seminar. In this proposal occasion, I am Abdurochim, student of Master Management Faculty of Economy, University State of Jakarta. I would like to say thank you for the examiners who have given me an opportunity to present this proposal with the title The Influence of Corporate Financial Performance on Corporate Social Responsibility with Quality Management as a Moderation Variable in the Banking Subsector. In this proposal thesis seminar consists of three chapters. The first chapter is Introduction, the second chapter is Literature Review, the third chapter is Research Methodology. In this proposal is supervised by Dr. Gatot Nazir Ahmad and Dr. Eti Gorendawati. The background is most companies run operation financed by debt and equity, which can provide the main benefit of debt financing and tax, while the disadvantage of debt financing are debt costs, interest, or return paid by company on the debt. The economic in company increase when the company earn a profit. Obtaining from a profit, the company can fulfill other goals. One of them is corporate social responsibility. According to Abdurochim 2018, corporate social responsibility or CSR is a concept in which company integrate social and environment concern in a business operation and a voluntary interaction with stakeholders that lead to sustainable business success. According to ISO 2000, 26,000, that organizational responsibility for the impact of its decisions and activity on society and the environment through transparent and ethical behavior that contribute to sustainable development, including the health and welfare of society, taking into account the expectation of stakeholders, comply with applicable law, and be consistent with international norms of behavior, and integrate across the organization and practice in conjunction. It can be concluded that corporate social responsibility or CSR or social responsibility is an action taken by company as a sense of corporate responsibility for the impact caused by the company's operation on social and the surrounding environment where the company is located. Corporate social responsibility is one of the obligations that must be carried out by companies in accordance with the content of Article 74 of Law Number 40 of 2007 concerning limited liability company, or Indonesia say UUPT. Disclosure of corporate social responsibility is a concept about the need for a company to build harmonious relationship with the community and other stakeholders according to Abidin and Lestari 2020. The current economy is very uncertain and has an influence on investors in facing a high level of uncertainty income, so that the focus of attention in assessing the performance of a company is accounting profit. On the other hand, financial performance is an illustration of the success of the company, which can be interpreted as a result that have been achieved for the various activities that have been carried out according to Property 2019. Financial performance is also one of the indicators that an investor will look at if he wants to invest in a company. Investors will tend to invest in the companies that have a good financial performance. Because companies that have good financial performance can certainly reflect how the company's ability to generate profit in attraction for the investor. And today, global economy, quality management has undergone change. The concept is no longer limited to the manufacturing sector that has explained to service companies and not-for-profit organizations such as healthcare, governments, services, education, and financial institutions based on Sylvancy 2004. So, that the principle and practice of quality management have been embraced by many quality managers and practitioners from the various sectors and have attracted the attention of many researchers from various fields. The info is from Talib et al. 2018. Based on literature Darachman Barenzi 2021, at this time, quality management is very important because quality management has a commitment to continuously improve its relationship to service with the customers. Based on the description above, this study intends to find out how corporate financial performance influence corporate social responsibility with quality management as a moderating variable in the banking subsector. Where corporate financial performance will be used in this study is profitability analysis proxy by return investment, return on asset, and return on equity. Now, we're looking for a research question. The first, does return on investment affect corporate social responsibility? The second, does return on asset affect corporate social responsibility? The third, does return on equity affect of corporate social responsibility? The fourth, does quality management affect corporate social responsibility? The fifth, does quality management moderate return on investment and corporate social responsibility? The sixth, does quality management moderate return on asset on corporate social responsibility? And the seventh, does quality management moderate return on equity on corporate social responsibility? And the research purpose is knowing the effect of return of investment on corporate social responsibility. The second is knowing the effect of return on asset on corporate social responsibility. The third is knowing the effect of return on equity on corporate social responsibility. The fourth is knowing the effect of quality management on corporate social responsibility. The fifth is knowing whether quality management moderate return on investment on corporate social responsibility. Sorry. The sixth, knowing whether quality management moderate return on investment on corporate social responsibility. The seventh, knowing whether quality management moderate return on equity on corporate social responsibility. The benefit of research is we have two of benefits. The first benefit is theoretical benefit and the second is practitioner benefit. From the theoretical benefit, this research provides an opportunity for researchers to apply the theory gained while attending lecture and insight and analyzing a problem, making decision and drawing conclusion about corporate social responsibility, quality management, return on investment, return on asset, and return on equity. This research can be used as additional information for readers and a reference for further research. And the second for practitioner benefit is this research contributes to completing questions regarding return on investment, return on of asset, return on equity, and quality management, whether it affects corporate social responsibility, and further research can be carried out with other variables that can complete this research. This research can be taken into consideration by company in analyzing corporate social responsibility decision making. The literature review, the trade-off theory. The trade-off theory model predict a positive relationship between income and leverage ratio by De Angelo and Masulis from 1980, Bradley and Myers from 1996, Sham Saunder and Myers from 1990s, and with Sakar from 2005. The basic concept of trade-off theory is minimizing the cost of capital by using appropriate debt and equity financing. The agency theory. Agency theory by Jensen Mackling from 1976 show how the conflict that exists on the one hand between managers and owner and on the other hand between owner managers and creditors can affect the company financing decision. In the developing agency theory, Jensen and Mackling version include assumptions taken from managerial economic, for example, by relying on the notion of subjectively expected unity of individual behavior. Jensen and Mackling assume that agents are inherently risk-averse. Agent will always have more information than principal proximity and familiarity with duties and responsibility assigned to them. What is corporate social responsibility or CSR? The definition corporate social responsibility according Navicas 2021, we can namely corporate social responsibility or CSR is commitment of business to contribute to sustainable economic development working with employee and their representative the local company and society at big to improve the quality of life. In a way, there is both good of business and good for development. According to the World Bank, corporate social responsibility is companies' commitment to contribute to sustainable economic development through the corporate of employee and their representative, the local community and general public to improve the quality of life through good business and development. According to Mukhtarudfah from 2019, that measurement of corporate social responsibility or CSR refers to 91 disclosure items, which are divided into three categories and four subcategories according to GRI. We can namely economic include 9 items, environment include 35 items, social covers is decent employee practice includes 16 items, human right includes 12 items, society includes 11 items, product responsibility covers 9 items. And the other uh, and the other how to calculate the CSR is ESG score dimension. ESG score dimension source from Thomson Reuters Aiken that they have three category from environmental, social, and government that every category have indicator rating like resource use 20 rating, emission 22, innovation 19, workplace 29, human right 8, community 14, product responsibility 12, management 34, shareholders 12, CSR strategy 8, and total is 178 scores in rating. The principle of corporate social responsibility, they have three principles of CSR according to Crowther and Aras from 2023. It is sustainability, accountability, and transparency. Benefit of corporate social responsibility is in implementing corporate social responsibility activity, it can bring positive benefit to society and the government based according to Camodi 2022. It is the first benefit for society, the second benefit to the government. Definition Now we can move to definition of financial performance. According to Slamet and Ramdhani 2020, the definition of financial performance is as follow: achievement achieved by the company in a certain period reflect the level soundness of the company. According to Bauer 2019, measurement of a company financial performance can be seen from two kinds of measurements, namely market-based measurement and accounting-based measurement. Stage and analyze financial performance. The performance appraisal of each company varies depending on the scope it is running. According to Fahmi in Winano 2019, there are 5 stages in analyzing a company financial performance. Namely, the first is reviewing financial report data. The second is perform calculation. The third is make comparison with the calculation result that have been obtained. The fourth, perform interpretation of the various problem found. The fifth is seeking and providing solution to various problem found. According to Jumingan in 2021, financial analysis can be divided into 8 types. 1. Comparative analysis of financial statement. The second is trend analysis. The third is percent analysis. The fourth is analysis of source and use of working capital. The fifth is analysis of source and use of cash. The sixth is financial ratio analysis. The seventh, analysis of change in gross profit. The eighth, break-even analysis. Financial performance measurement. Performance measurement is very important factor for the company because it is an attempt to map the strategy into action to achieve certain targets. On the other hand, the performance measurement system functions to increase motivation and spur employees to comply with the standards of behavior set by the company in order to achieve organizational goals that are in accordance with desired result. Purpose of financial performance measurement is financial performance can reflect the company achievement so that it can be used as a measure to assess the merits of finance of business entity in certain periods. Financial performance can be analyzed through financial ratio and financial report by Rah Mawardani and Musihlah in 2020. Return on investment measure how much net profit can be obtained from all the wealth owned by the company. Return on investment can be calculated using the formula is net income divided the cost of investment. Return on asset. According Brigham and Houston, the ratio of net income to total asset measurement the return on the total asset after interest and tax. So we can see the formula return on asset is net income divided the total asset. The return on equity. Brigham and Houston state that return on equity is a most important ratio. Return on equity is used to measure the company's ability to obtain profit available to shareholders. Based on this explanation regarding return on equity, it can be formulate the calculation of return on equity as follows: that earning after tax divided the common equity. According management. Quality management. According to Coco Ferra from 2022, the perspective on the bank financing service is on matters based on digital technology. Quality management can be seen in the bank financing service based on corporate social responsibility and the digital economy, namely improving banking security. The indicator is cybersecurity. Internet banking development, the indicator is internet retailing. And the last is banking automation based on artificial intelligence. The indicator is use of big data and analytics. The previous research, I picked some of literature review that really important uh, to this research. This research is the first is are you good from the journal, are you good enough CSR quality management and corporate financial performance in the hospitality industry. Variable dependent is CSR, independent is return on equity, and moderation is quality management with a method multiple regression method. And the result is CSR have a positive effect from corporate financial performance. And the second is analysis of influence of profitability and corporate social responsibility on firm in the banking list, the IDX for the 2016. And the third is analysis of influence financial performance to share price at food and beverage company list, IDX period 2011 until 2015. Theory framework. We use return on asset, return on investment, and return on equity proxy from financial performance as independent variable, while dependent variable is corporate social responsibility and quality management as moderating variable. So we can see how the picture is the X1 is return on investment, X2 is return on asset, and X3 is return on equity effect to corporate social responsibility with quality management as X4 as a moderating variable. The hypothesis development. The first, the influence of financial performance on corporate social responsibility. I can found that H1 is return on investment effect a corporate social responsibility. H2 is return on asset effect corporate social responsibility. H3 is return on equity effect corporate social responsibility. The effect of quality management on corporate social responsibility, I can found that H4 is quality management influence the corporate social responsibility or CSR. And the influence of quality management moderate corporate financial performance on corporate social responsibility. The H5 is quality management moderates return on investment on the corporate social responsibility. The H6 is quality management moderate return on asset on corporate social responsibility. And H7 is quality management moderates return on equity on corporate social responsibility. Now we can move to research method that unit of analysis, population, and sample. Units of analysis to this research is secondary data, and the half population is banking subsector company list on the IDX for the period 2017 until 2021. And we will get the sample is registered and active on the Indonesian Stock Exchange during the study period 2017 until 2021. The company must submit and report its audited financial statement for the 2017 until 2021 period on the Indonesian Stock Exchange website or idx.co.id or their respective website. This is the table of variable research as dependent variable is corporate social responsibility with operationalization with CSR index, and then variable independent from ratio profitability is return on investment, return on asset, and return on equity, and then variable moderation is quality management with operationalization is we will use dummy from ISO 9001 in equals is 1 and non-ISO 9001 is 0. The data analysis technique, data processing technique are carried out with help of Microsoft Office 365 software and regression analysis using SPSS 27 and testing classical assumption tests, t-tests, and coefficient determination tests. I think that is my presentation for the proposal thesis seminar. Thank you very much. And once again, thank you very much.